What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is March 27th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I not only want to spend some time to give an updated viewpoint on Bitcoin's price action, to talk about where we could be heading over the next couple of days, but beyond that as well, we've got to talk about a big headline event that claimed a penny stock was going to be purchasing over 20,000 Bitcoin. I'm going to be giving you guys my candid thoughts on that and what I understand from the data available. But beyond that as well, we're also going to be talking about a major potential rotation from the established and legacy large cap plays in the crypto space into a lot of small mid cap plays and emerging narratives. Outside of this as well, we'll also be taking a look at equity markets and giving a broad macro review. So if you guys happen to enjoy this episode, consider dropping a like. It's one of the greatest ways you can support the content we put out here on this channel. And let's go ahead and kick off the rambling. All right, guys. So I want to spend some time here to talk about Bitcoin's price action, because since we last spoke on Monday, we talked a lot about essentially watching how Bitcoin reacts with these key momentum moving averages. These have incredible significance, as these have been playing essentially as the key levels to find entries on a dip and generally support the broader trend since back in January after the kind of post-ETF launch correction that dragged Bitcoin's price down to the 100-day moving average. Well, over the last 24-48 hours, we've seen a pretty nice substantial bounce here from when we were chatting back on Monday, essentially rallying from around 67,000 all the way up to 71.5K as of yesterday. However, we haven't seen much follow through during this period of time. In fact, we're seeing a lot of stagnation really since back during the later part of Monday. And I want to talk about why this might be here, why we're not seeing so much follow through, and why right now it's pretty clear by looking at price that so far we're struggling to hold on this 9 EMA in the 4-hour time frame. We're not bouncing off with a lot of confidence like we did back here on the lower price range. So what's really going on here? Why does it look like we're likely going to fade through this range and test some of these lower levels and maybe not even hold at those moving averages? Well, I think there's a few clear reasons for this. One of them that we got to talk about here is obviously the ETF inflows. I'll run through this quickly. I know we talk about this a lot, but generally speaking, another major outflow day for GBTC. Nearly 5,000 Bitcoin being pulled out of the Grayscale GBTC product. Generally speaking, because of the Genesis sell-off through the bankruptcy proceeding. But we can see here that there was a big inflow day for Fidelity. So Fidelity, again, kind of softened the blow here to a large extent. Otherwise, though, other ETFs are seeing a couple hundred BTC. Not terrible, but not what we need at these price levels, showcasing a big shift in sentiment here. So overall, just an increase of 231 Bitcoin for the day. Again, not getting ourselves out of the woodworks just yet, back to where we were back when we were seeing thousands of Bitcoin being purchased today. So this dynamic is important and significant here. And whether or not you believe the ETF is going to help propel it long term, we've got to see the numbers show up here in the inflows. This is what allows daily price action to make moves in either direction if there are significant inflows or outflows. But beyond all this as well, beyond the kind of selling here, a lot of the forced selling from Genesis and this kind of alleviation from the GBTC product, and the hope that other ETFs will not only be able to stomach that sell side pressure, but ideally outpace it and increase inflows. There is another topic we got to talk about here, which is the story around Nilam Resources. Now, Nilam Resources at this point is practically a shell company, pink sheet penny stock, worth practically nothing. It was trading around $1 million market cap, or less than $1 million before making this announcement, has practically no cash on its balance sheet, but has now come out stating that they are going to be doing a supposed joint acquisition of 20,000 Bitcoin, actually more than that, essentially around 24,800 Bitcoin, alongside a company known as Cyberdata. Now, there is little to no evidence that this is the case, that they have the capital or resources to do this. In fact, it's important to note here that not only do the financials showcase they don't have the cash for it, but beyond that as well, it's also imperative to note that the CEO of the company on the day of the announcement supposedly resigned and claimed that this was a clear pump and dump and that he was not made aware of the announcement of supposedly the company going through this transition to become a Bitcoin owning balance sheet company. So at the end of the day, guys, this smells incredibly fishy. And I think anyone who's actively promoting this is just, again, as Peter Spina said in this case, promoting a clear pump and dump. All they've done is engage in a letter of intent, and as many people probably know in the legal world, a letter of intent is almost as valuable as a handshake. It has little to no legal binding and is more of a statement of intent to do something. So at the end of the day, this is likely a fake news event. I don't think there's any case where a penny stock and some company, I think it's a company based out in America, is just going to come out of anywhere with a website like this and be going out there and purchasing such a large sum of Bitcoin. It really doesn't make much sense. And things that usually don't add up for a reason. So I would just say that if that was a big reason why this move happened here, is it does align quite steadily with the news event, it makes sense why Bitcoin would fade. And I think more than anything, this was a malicious intent move here that's going to correct in due time. Not just those who bought Nilam shares or basically the penny stock, but also those who bought Bitcoin off of the news, right? It's fake news, and the market will likely correct and reprice that in at this point. Now, outside of that as well, guys, I just wanted to go ahead and talk about what this means for price action. And generally speaking, irrespective of the headlines, what drives price, there's always manipulation. But if Bitcoin cannot find support on this non-EMA, you have to hope that it's going to find support here at the 21 4-hour EMA or the 50 4-hour EMA. And if we continue to collapse through this, this will just be another clear sign that we are not ready to continue higher and need a broader correction to a capitulative range that we've discussed here for the past week or so. It's not me being ultra bearish here. All right, the fact that we've had this nice move is great, but if you can't get above the prior highs here, this is showcasing very clearly. And we're seeing it in the ETF inflows. We're seeing it yet again when the market is desperate to get buyers to come in, doing some kind of makeshift move, some kind of form of manipulation to get prices up. This is the typical kind of late stage stuff that you find when you're in need of a much needed and desperate correction in crypto markets, right? So I'm just making that very clear here, guys. It's very clear in the ETF inflows that they have slowed dramatically. The FOMO has really slowed down here. You've got some accumulators for sure, but it's not keeping up substantially with the amount of outflows that are coming to the GBTC product. And the only good days we're getting are ones where there's a couple hundred Bitcoin net overall. That's not going to move the needle for Bitcoin to continue accelerating higher. I'm just being honest with you guys here. So again, until those dynamics change and until we can really start steadily bouncing off of the 9 EMA on the 4-hour time frame like we did multiple times back here, and every time we'd make nice, much more confident moves in price, we wouldn't even come down and touch that 90 EMA before we continued accelerating. And then we would accumulate sideways with little to no fade here, not even touching the 21 4-hour EMA, and then continuing to reaccelerate. So it's very different price action here, just to keep you aware of that. But let's go ahead and talk a little bit about the altcoin topic, guys, because I want to go ahead and talk about others. Now, so far over the last 24 hours, others' dominance, as it has really since back here throughout the earlier part of March and here back in December 2023, is facing chop and resistance around this 13.5% range. So these are all other plays out there that are generally plays outside of the top 10 cryptocurrencies, from Bitcoin all the way down to some of the leading altcoins like Ethereum, ADA, BNB, XRP, you name it. What I want to spend some time to talk about here, though, is the general broad strength we've seen in others' dominance over the past couple of weeks. Every single time we've faded on others' dominance, we've generally, since back here in late February, so over the course of the month here, set in higher lows and generally higher highs. And we are really knocking at the door here against those prior December 2023 highs. And if we take a look at history, it showcases that we've got the room to move much higher here. Now, I don't know exactly if it's going to be this week, next couple weeks, if we chop sideways for some time, maybe build some kind of ascending triangle or some kind of pattern of accumulation here that eventually squeezes higher. But the main point I want to talk about is that if I were to place my bets here as we get towards what I think is inevitably going to be the later stages of this crypto cycle, where the risk-reward profile, essentially the risk-taking mentality starts to really pick up, I think that there's going to be an opportunity here for a pretty substantial move in others' dominance. We are not only historically far away from where we used to be back here in 2021 during the peak of the mania, but outside of that as well, as Bitcoin has breached new all-time highs and has generally given the space an awash of liquidity with the strong narrative of around the ETF, then I think in this case you're going to have a lot of smaller plays that have much more exciting narrative strength to take off. Now, the big thing here I want to talk about is I'm not even saying that there's a huge new surge of liquidity into the space. Sure, there's the ETF, and there is going to be a beneficial factor for altcoins because essentially, even though those ETF flows are just going to Bitcoin, it does increase the value of Bitcoin, and the vast majority of Bitcoin are not held in ETFs. So for active traders who want to lock in profits and recycle them into other places, they can do that, and they equally benefit from the ETF just as much as someone who has their capital in the ETF, right? So that's an important dynamic to already consider for altcoins to be able to appreciate, especially the fact is that we have a lot of altcoins that have yet to really accelerate against Bitcoin. But beyond that as well, I want to talk about a potential play scenario here that could play out in the altcoins market, which is essentially the idea that we could see a massive rotation from the large cap, the top 10 plays, into other plays that are in strong narratives. Now, I want to talk about this because I think not only can we see this playing out in price action, Ethereum is a great example. Ethereum has been on a clear downtrend, right? We had a couple months here where we tried to find a base, but it's looking very much like we're not going to be able to do that. Just generally looking at the monthly candles here, no serious ability to have a nice green candle here, locking in a month's worth of gains. We've been on a downtrend clearly since back in September 2022. Some may argue since December of 2021 against Bitcoin. And it looks very much like we're going to be coming down to this golden line that we talked about for a long time, as the green line could not hold here. This is a very long term, since back in December 2016, this was the line of support against Bitcoin. And it not only was clearly broken over the past couple months, but there's no buyers coming in to play this as a deviation trade, right? So this looks like it's going down another 25% against Bitcoin here, which means that if Bitcoin is holding where it is or it's appreciating, that's a big depreciation in Ethereum's market capitalization. That's billions upon billions, tens of billions of dollars at a minimum. And this means that I think there's a chance for a lot of that valuation to rotate into other plays. It could some go into Bitcoin, obviously, with the decline of the BTC ratio, but I think a lot of it also is going to go into a lot of other altcoins. And I think you're seeing this across the board. Solana as well, while this has been definitely the hot topic for the past couple of months, Solana's done very well versus a lot of other layer 1 infrastructure plays. Still stalling at the same range we were at back in December and showing the same kind of basically forced selling here at the top, sideways consolidation, and then breakdown, further price decline. So we're seeing clearly here that this is a range of prior resistance in the past, and it seems to be playing out yet again. We also see this as well with Cardano, not able to even bounce off of its line of support here. I'm not here to bash Cardano's technology. I know some people are big fans of Cardano, same as they are with Solana, same as some of you are with Ethereum. But I'm not here to talk about fundamentals, guys. I'm here to talk about making money in the markets and not losing money. And we can see very clearly that Cardano has lost out big time, 33% since back in December against Bitcoin. Not a good look to see, right? And this is clearly looking like it's snapping through that long-term line of support that is held since back in October of 2017, right? This is, again, not the exception here. There are a lot of other plays. BNB, an exchange-based token, and also having the Binance Smart Chain is a bit of an exception. It's still holding generally on its long-term line of support, but it is very close to seeing a break of that. If it goes down, back down to the prior lows of December, you're very much talking about a clear technical breakdown from that line of support, probably going all the way down here towards much lower support ranges that could potentially play out. We could also see XRP. While XRP is potentially coming down here to test the golden line of support since back in March 2017, we are not seeing any resiliency from buyers, and 8 green weeks here are getting faded hard and then followed by red weeks. Not a good look to see. Then we see, for example, Avalanche, right? Setting in a lower relative high versus back in December 2023. I think rightfully so. There's not a huge amount of traction going on in the Avalanche ecosystem. I think the same goes for Solana. The only thing Solana's had for it is Memecoins, right? So from a fundamentals perspective, I think you can make an argument against a lot of these networks, but overall the price action is just screaming it to you. It's telling you that essentially this thing has not been able to make new accelerated moves since really back in December, and it looks like it's ready to fade down even further as it has shown a trajectory of lower lows and lower highs. And the only exception we've had in the large caps, really at the end of the day, is Memecoins. throughout 2024. Meme coins have been really one of the strongest narratives here out of the large cap plays like Dogecoin and Shiba Inu that just circumference right around the top 10, the top 20 plays. Those have been some of the best performers here. Whether we like it or not, the baseless speculative plays are the ones that are winning. I think that again speaks to our point here that there really aren't many fundamentals that are convincing enough on these other L1s, right? So what's my point in all this? My point here is that it's clear that a lot of these networks here, it doesn't matter if you're talking about Binance Smart Chain, it doesn't matter if you're talking about Ethereum, it doesn't matter if you're talking about Polygon, if you're talking about XRP, if you're talking about the vast majority of plays, ADA, Cardano, all these networks, they aren't really at the forefront of most narratives, right? They're not tapping into providing Bitcoin infrastructure. They're not tapping into DePIN. They're not tapping into, well, I guess in some cases, maybe Solana is with meme coins. But generally speaking, there's nothing really exciting. Most of these networks don't have the foundation to be able to support real world assets, to be able to go out there and become the leading platforms for tokenization. And because of that, the market is repricing them. So what I want to get to here is talking about the fact that we have billions, hundreds of billions of dollars in valuation locked up in these top 10 plays, excluding Bitcoin, mind you, right? Where even a lot of that value could rotate into altcoins and an eventual altcoin cycle. I think that there's a very good chance you see a lot of that valuation, the existing liquidity and capital and valuation rotating into a wide array of small and mid caps and a whole new range of narratives. Now, I'm thinking if you guys would like to see it, I've been starting to do some research. I mean, of course, I'm always doing research on markets, but I've been really honing in on this topic of doing like a top 10 emerging narratives video. And I would really love if you guys would like me to do that, to really do a nice in-depth video, maybe like a 30-40 minute video where I go through and talk about some of these narratives. I'll talk about some projects, obviously, that I think fit into these narratives, but I want to talk about some that obviously are on the rise that you might be aware of and provide some great projects in those different types of categories. But beyond that as well, I want to talk about some that I feel are really on the cusp. Like we're seeing good price action, we're seeing accumulative signs, we're seeing overall that there is a clear need for these, innovation at the forefront of these projects, actually doing real things, solving for real problems in crypto. So if you guys would like to see that, leave a comment down below. If someone's already left a comment there, you see a couple, drop some likes on them so it really gets traction and we know that you guys want to see that here on the channel. I would love to do a video like that on Monday, Wednesday next week. So I'll try to keep that in my mind and stuff if you guys state that you would love to see that. And again, if you guys would like to see it, you can also drop a like on this video. It helps us out and it'll let me know that you guys really want to see it. Outside of that as well, I wanted to let you guys know here that irrespective if you're investing in the large caps, if you're trying to capture a lot of these new small emerging plays, one exchange where you can get access to a lot of them is through our partner Crypto.com. Now, Crypto.com is a massive cryptocurrency exchange servicing the United States, Europe, and a whole range of other regions across the world. And whether you're a more active trader or more long-term investor, Crypto.com is a perfect platform for you. It is basically one of the few all-in-one cryptocurrency platforms that not only has cryptocurrency trading as well as staking, but a whole range of other products, including their debit card, their own payment system, NFTs, and a whole range of other things. One of the things that I want to let you guys know about is they have one of the best loyalty rewards programs in the crypto space. This is what's known as Crypto.com Rewards Plus. Now, Crypto.com Rewards Plus is essentially a feature that allows you to be able to earn and benefit a whole ton of different ways when utilizing the Crypto.com app for trading and other general cryptocurrency activities. You can trade from your computer, but you can also trade directly from the mobile application, which is one of the best in the crypto industry. And you're not only able to earn high earn plus bonuses on stablecoins, up to 10% annually on your stablecoins by trading enough in the platform, but beyond that as well, you'll also earn extra Visa card rewards, up to 8% cash back on your spending, but along with it as well, better referral incentives, up to potentially 4 times what you get from normal referrals. And on top of that as well, you're also able to get trading rebates for every trade you make, receiving CRO, the native utility token from the cryptocurrency or crypto.com application. So I definitely recommend you guys consider checking it out. Crypto.com has been around the crypto space for a long time. They've built one of the best mobile exchange experiences in the crypto space, and they've got a whole range of bonuses for supporting you utilizing the platform and becoming an active user, but also just a whole range of services that you just can't get on many other cryptocurrency platforms. I'm also going to be doing a review for crypto.com later on in the next couple of days. So if you guys want to watch that, keep an eye out for it. Make sure you hit the bell icon. If you haven't already, subscribe, and you guys can check that out. It'll be a really cool review covering a lot of different corners of the application. So if you want to wait and figure out if it's the right application for you, feel free to do that. If not, you want to go ahead and try it out today, use the link down below in the description for signing up for crypto.com. And I'd love to hear down below in the comments what you think about your experience, or if you already use cryptocurrency.com. So let's go ahead and talk a little bit here about the broader equity markets. I want to go ahead and talk a bit about Nvidia and the AI narrative. Now, we had back about a week ago the big Nvidia conference. This was one of the big AI conferences that's got a lot of people excited. There was some really cool reveals. It seems right now that there is this aura in the air that the machines are about to take over. There was a lot of demos of how, for example, GRUD, which is one of the new Nvidia frameworks for AI model training, which I think overall is quite interesting for sure. I'm very interested in the potential behind this technology. But I want to signify here that a lot of people, at the moment where everyone sees clearly the value proposition, it is usually the peak. Okay. Now, I love the presentation. It was cool. Nvidia released a new chip as well that's going to be allowing for much heavier computation for AI. I think it was Blackwell, if I remember the name correctly, but there's a whole new range of innovations that are coming out from Nvidia to tap into this need for artificial intelligence or generative AI. But the big thing I want to echo here is that, again, when we get to this point, when it becomes so clear and everyone is getting on the bandwagon, the AI narrative seems like it can't be stopped, it seems like the robots are going to take over, and everyone's really excited about it, that's usually the time when the markets have priced it in. The trend has gotten a bit overextended. And I think if we just simply zoom out here, I mean, we can look at the short-term price action on the daily time frame. You can see very clearly that this range here is a heavy distribution range. We had our biggest down day here for Nvidia throughout the past couple of months, a huge rejection candle right under $1,000 per share, or in market cap terms, we're talking about a valuation around $2.5 trillion at that range, right? So massive PE multiple expansion, huge valuation expansion. But beyond that as well, not just taking a look here on the daily time frame, but the weekly time frame. When we zoom out, we can see a very clear trend here. And this is something we might have talked about here before on the channel, but I want to echo this point that Nvidia and graphics technology, GPUs, have gone through a couple demand cycles. One of them back here from 2015 to 2018 was the increased demand around GPUs for video games, for computational demand around video editing, etc. Essentially, the era of the personal computer made a strong comeback. Not to mention, we also had huge data infrastructure demands for GPUs as well, for a variety of different jobs and resources in the earlier stages field of AI. Outside of that as well, all those narratives continue to accelerate, but beyond that as well, we had the increased demand for GPUs, for Ethereum mining, and a whole range of other crypto-related mining narratives, which gave, in this case, another 1,000% plus move here for Nvidia. Now, what we can see here is that we've had a third wave here, and while these corrections can be quite brutal, they overall continue to make accelerated new highs. This time around, we've had a near 800% move and are coming up towards Nvidia being on par to be the most valuable company in the world. It is also at a point here as well where the share price is nearing a big even level of $1,000. And if we take a look at the prior ranges of resistance in the past, aligned with the one here in November 2021, we can see very clearly that we're getting towards inflated territory. We're getting towards bubble territory. Now, that's not to say that Nvidia is going to go down this week or today. I'm not here to say you need to go all short on Nvidia. I would not do that. I think that could be quite dangerous. But the thing I want to say here is that we're getting in the very late stages here, guys. And anyone who isn't telling you that, or at least telling you to heed a bit of caution here, when even some of the biggest AI bulls, for example, on stocks like SMCI and Nvidia, are starting to offload or distribute some of their positions, that should be your sign very clearly that I'm not just being too bearish. Those who might have been a bit more skeptical of the AI trade are not just being the ones just kind of hampering everyone down. Oh, you shouldn't buy AI and stuff. No, it's just getting to a point where even a moderate healthy correction, maybe not an entire flush down, but some kind of correction of some sort is likely going to play out. And if you aren't looking out for that, and you get caught up in the hype and euphoria, it can really leave you badly burnt. When I take a look at the broad indices, the S&P 500, the NASDAQ, beautiful price acceleration. Really great stuff here. Holding on those momentum moving averages. See how important it is, guys? That 50 EMA on the 4-hour time frame serving as that foundational layer of support, right? Essentially, price doesn't spend much time below there if we're in a continued uptrend. But when those indicators start to serve as resistance, as we saw back in August, that's your corrective signal, right? We can see it back here as well, right? As we started to not be able to hold in these moving averages, we clearly started to treat them as resistance. This was your telltale sign that prices were moving lower. We can see this as well, not just in the S&P 500, but also in the NASDAQ as well, generally holding by that 50 EMA. And when we get a clear breakdown below those moving averages, which we haven't seen yet, so I'm not here to say that prices can't accelerate for the next couple days, next week or so. All I'm here to say is that when those moving averages break, you've likely got a good gauge to start watching for a potential short opportunity, or at a minimum, taking profits, stepping away from the risk-on narrative and going back into cash for some time. I think that's important to keep in mind, guys. And as we're watching the US 10-year minus the US 2-year yield, we've got to be cautious about that yield curve uninverting. We have not continued to invert here over the past couple of weeks since back in mid-February. So we've been in a month here where it's been relatively neutral, and we might be finding that foundation to break out. I'm not really going to get too worried until we get back into neutral territory, or when we get back up here towards the January highs of 2024, October 2023. I'm just saying every single week, at a minimum once a week, you should be watching this chart. Irrespective if you come into the DataDash channel, we will be covering it at least once a week usually here on this channel, usually twice a week. But I echo this, I beat it like a dead horse here. If you lose sight of this chart, you very well may be losing sight of where equities are going to be heading over the next couple of months and potentially miss out on avoiding a big recession if it does end up playing out here in the next couple of months. I'm all for the AI narrative. I'm all really excited about crypto becoming more institutionalized, becoming a more well-known and accessible asset to the world. And I do believe that there is that potential for this thing to make multiples. But even though I may believe that and may be open to that idea as a trader, I'm also going to prioritizing price action. Any smart trader should do that here. You guys cannot fall in love with your positions. If you do, you'll end up caught in narratives in which may look really great in the surface, maybe really great in the short term, maybe leading you up on your money, but eventually could end up leaving you losing money in the end. So I don't want you guys to be in that position. So just keep that in mind here as you guys are going through your journey. Don't settle for less here. Make sure that you protect and preserve your capital first and foremost. That's not a bearish thing to say. That's just, I think, overall good finance 101. It's the only reason why after so many years, I know so many people who've been in crypto longer than me, who have been around the same time, short period of time, who've ended up actually losing money or have ended up, generally break even, making a little bit of money. And the reason why is because they trip up, they take too much leverage positions, they go into the wrong altcoin narratives with all their capital right at the peak, and they just generally are betting on hopes. You need to listen to price action. Price action will tell you everything. And if you aren't seeing confidence in price, you should ditch it and get out until there are the kind of signs that signal confidence again. Maybe Bitcoin is showing that here on the 9 EMA. We're going to have to see it on the 4-hour time frame EMA if it can start to hold and continue higher. If it does, we're going to be chasing a lot of altcoins that won't be lagging against Bitcoin, but ones that should be leading against Bitcoin. They're in the strong narratives. So again, if you guys would like to see that video, let me know down below in the comments. I look forward to doing some really nice evergreen content pieces like that, some ones that are really exciting to come back to, and just have as a good food for thought video for some potential plays to watch for. Anyways, that's it for today's video, everyone. Thank you all so much for watching. I hope you guys have a fantastic day wherever you are, and I'll see you all in the next video. Take care, everyone.